Welcome to XRP Pro Ledger. And you need to stop what you are doing right now because something just dropped in the middle of the trading day that completely changes the institutional picture for XRP, and most of the market has not even processed it yet. Right in the middle of a live trading session, Coinbase Derivatives quietly filed an XRP Market Maker Program directly with the CFTC, the United States commodity regulator. And if you understand what that actually means for the infrastructure being built around this asset, your jaw is going to hit the floor. This is not a rumor. This is not a tweet from an anonymous account. This is a formal regulatory filing from the largest crypto exchange in America. And it just landed today. We broke above $1.45 last night for the first time in 68 days. And now this. The institutions are not coming. They are already here and they are building right now. Let me set the scene for you before we get into the details, because context is everything with a development like this. Last night, we covered three of the most significant institutional leaks in XRP history. Brad Garlinghouse's exclusive Senate seat at the Clarity Act hearings. The revelation that incoming Fed Chair Kevin Warsh holds over $100 million in assets with major crypto exposure. And Jamie Dimon of JP Morgan making his first publicly bullish comments about digital assets. Those three stories explained why XRP broke out of its 68-day consolidation above $1.45 with conviction. But here is what nobody was expecting. Today, less than 24 hours after that breakout, three more massive developments just dropped simultaneously. And together they tell you something that should make every serious XRP holder sit up straight. The master plan is not being drafted anymore. It is being executed in real time. So, let us start with the Coinbase CFTC filing, because this is the one that made me stop everything and record this update immediately. Coinbase Derivatives has formally submitted what they are calling an XRP Market Maker Program to the CFTC. And the specific stated goal of this program is to drastically increase institutional liquidity for XRP. Now, if you are wondering why liquidity matters so much, here is the answer in plain language. Right now, if a massive institution, think JP Morgan, think a sovereign wealth fund, think a multi-billion-dollar hedge fund, tries to buy a very large position in XRP all at once, the sheer size of their order would move the price dramatically against them before they finished buying. That is called price slippage, and it is one of the single biggest reasons why the largest pools of capital in the world have stayed on the sidelines of crypto markets. Coinbase is now formally and officially building the solution to that exact problem. Think about what Coinbase filing this with the CFTC actually signals in terms of timing and intent. You do not go through the process of submitting a formal regulatory program to a federal commodities regulator unless you have already had the conversations with the institutional clients who need it, unless you already know the demand is there, and unless you are confident the regulatory environment is stable enough to build on. This filing is not Coinbase guessing that institutions might want XRP liquidity someday. This is Coinbase telling the CFTC that the institutional demand for XRP is real. It is coming, and they are building the infrastructure right now to handle it. And remember what Jamie Dimon just said publicly yesterday. JP Morgan, the largest bank in America with over $3 trillion in assets, just signaled they are moving toward digital assets. Coinbase just built the pipe they are going to use to get in. Now let us talk about the second development that dropped today, because this one expands the XRP story into an entirely new financial ecosystem that is worth hundreds of billions of dollars. Wrapped XRP is now officially live on the Solana network. For anyone who is not deep into the DeFi world, here is why this is a very big deal. Solana is one of the fastest and most active blockchain networks on the planet, home to a massive multi-billion-dollar decentralized finance ecosystem with hundreds of protocols, liquidity pools, lending platforms, and trading applications running on top of it. Up until now, XRP and all of that Solana DeFi activity existed in completely separate worlds. XRP holders could not participate in Solana DeFi, and Solana's massive user base had no direct access to XRP as a tradable and usable asset. The implications of wrapped XRP going live on Solana are layered and significant in ways that will play out over the coming weeks and months. First, and most immediately, XRP now has access to on-chain trading volume from an entirely new and enormous user base. Every Solana trader, every DeFi protocol, every liquidity provider operating on that network can now include XRP as part of their activity. That means organic demand flowing into XRP from a direction it has never come from before. But the deeper implication is about utility. One of the most persistent critiques of XRP from skeptical corners of the crypto community has been that it lacks on-chain utility beyond cross-border payments. Wrapped XRP on Solana dismantles that argument completely because now XRP can be used as collateral, as a trading pair, and as a yield-generating asset inside one of the most vibrant DeFi ecosystems in the entire blockchain space. And if those two developments were not enough to make this the most significant midday update we have ever done on this channel, the third piece of news that dropped today might actually be the one with the longest-lasting price impact of all three. XRPL validators, the decentralized network participants who govern the XRP ledger, have begun formally voting on two native lending protocol upgrades, designated XLS65 and XLS66. What these two proposals do, once passed, is allow XRP holders to lock their tokens directly on the XRP ledger in exchange for passive interest earnings. In other words, for the first time in XRP's history, holders will be able to stake their XRP natively on-chain and earn yield without sending their tokens to a third-party exchange or a centralized platform. This is a native, decentralized on-ledger lending protocol, and the vote is happening right now. Here is why the lending protocol vote triggers something that the supply and demand fundamentals of XRP have never experienced before, and why the term supply shock is not an exaggeration here. Right now, the majority of XRP that is not being actively traded sits in wallets or on exchanges in a completely passive state. It earns nothing. It does nothing. It just waits. The moment native on-chain lending goes live and holders can earn passive interest by locking their XRP directly on the ledger, a very large number of those passive holders are going to lock their tokens up. That XRP comes off exchanges. It leaves the liquid circulating supply. And when institutional demand is simultaneously ramping up through Coinbase's new Market Maker Program and fresh DeFi volume is flowing in through wrapped XRP on Solana, you have rising demand colliding with a shrinking available supply. That is the textbook definition of a supply shock, and it is being engineered into the XRP market deliberately and systematically right now. Let us take a step back for a moment and look at the full picture that is assembling itself in real time. Because when you lay all 6 of these developments out in sequence, the Senate seat, the Fed chair disclosure, the JP Morgan pivot, the Coinbase CFTC filing, the Solana bridge, and the native lending vote, what you are looking at is not a series of coincidences. This is a coordinated institutional build-out happening across every single layer of the XRP ecosystem at the same time. Legislative infrastructure is being secured through the Clarity Act. Monetary policy infrastructure is being aligned through the incoming Fed leadership. Banking infrastructure is being unlocked through JP Morgan's pivot. Exchange infrastructure is being built through Coinbase's Market Maker Program. DeFi infrastructure is being connected through wrapped XRP on Solana. And tokenomics infrastructure is being engineered through the native lending supply shock. Every layer is being addressed simultaneously. Now I want to address something directly because I know some of you watching are going to hear all of this and wonder whether you have already missed the move. You broke above $1.45 last night after 68 days of nothing. And now today, there are six major catalysts lining up behind the price. Is it too late? Here is my honest answer, and it is rooted in what institutional infrastructure actually means. When Coinbase files an XRP Market Maker Program with the CFTC, the institutional money that program is designed to serve has not entered yet. The program is being built right now. The pipes do not have water flowing through them yet. When Wrapped XRP just went live on Solana today, the DeFi volume that bridge is going to generate has not been generated yet. When XRPL validators are voting on the native lending protocol right now, the supply shock that protocol creates has not happened yet. You are watching the setup. The actual institutional capital deployment is still ahead of you. The most important skill in this market is the ability to recognize when you are early versus when you are late. And the way you develop that skill is by understanding the difference between price movement and infrastructure deployment. Price can move fast. XRP proved that last night at $1.45. But infrastructure deployment is slow and deliberate, and it always precedes the largest and most sustained price movements in any asset class. What we are watching right now is infrastructure deployment happening across six dimensions at the same time. The price reflecting last night's breakout is the market pricing in the news that leaked. The price reflecting what is being built today and next week and through the summer as the Clarity Act moves toward passage. That repricing has not happened yet. The institutions filed the paperwork today. The capital follows the paperwork. You are still in the window. What you do with this information is ultimately your decision, and nothing said on this channel is financial advice. But what I can tell you with complete confidence is that the combination of events happening right now around XRP, from the Senate chambers in Washington to a CFTC filing from Coinbase to the Solana DeFi ecosystem to the XRP Ledger's own governance process, represents a convergence of institutional, regulatory, and technical development that this asset has never experienced before at this speed and at this scale simultaneously. The $1.45 breakout last night was the market waking up to the macro picture. What dropped today is the market about to realize the micro infrastructure is already being bolted into place. Two separate engines are firing at the same time, and XRP is sitting directly at the intersection of both. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.